June, the briefing underway, and recap some of the news flow that's come out both late last night and overnight. Looking at the charts this morning, the major pairs, both Euro-Dollar and cable, sitting just above their respective pivot levels. Euro-Dollar, you can see top left here, having briefly got to test that early in the Asia-Pacific session, before then moving in a fairly narrow range really from late last night when the US markets closed, and have found a bit of support already this morning. So keeping an eye on those respective levels. Cable as well, similar type price pattern if you like, looking at that test seen at pivot from overnight, but so far holding up, but looking a little heavy again this morning. And we'll talk about a couple of updated news stories that have come out that are very sterling specific. In terms of the equity markets, a bit of a mixed closed on Wall Street last night. Some outperformance once again in the Nasdaq. That seems to have been the case after kind of the heavy selling that was seen probably 2 weeks ago now. The Nasdaq is continuing to pare those losses. If we look at this on a bit of a longer dated chart, if I can encapsulate that fall that we had, if you remember, that was when there was a bit of a panic at the time about overvalued tech kind of sensitive stocks, the FANG names, so Facebook, Amazon, Google, those types of firms that have really outperformed the benchmark index like the S&P by something like 5 to 1 from the start of the year. A bit of a rotational play was said to have contributed to that sharp fall seen on the 9th. That continued for a second day, but we've continued to just slowly recover a lot of that move, so more than half of that drop already taken back already. Keeping in mind the Nasdaq outperformance does come with the likes of the S&P, don't forget, have already traded up at all-time highs, so it makes a bit of sense, I guess, that the Nasdaq would continue to diverge, if you like, in performance slightly from those other indices for the time being. The S&P pretty flat, the Dow slight negative on the session, but not really too much of a read across for Asian markets, which did see overnight a bit of outperformance for a second consecutive day in the Chinese markets. Nothing substantial, certainly a little bit of positive sentiment though, given the stories we were covering yesterday, where the country now has been included in the MSCI Equity Global Index going forward. A few things then to touch upon. First of all, let's have a look at oil prices. One thing that you'll notice is we're trading a sub 43 handle now, and last night, of course, we did briefly breach 42.20. That was a fairly significant level, albeit briefly we got beneath that point. This was that longer term level that we were looking at yesterday as well. This was that kind of early March support point, was the same again in the summer of 2016 and November of 2016. So a substantial or critical key level of support, which if broken could open up a bit of further downside, with 40, a push toward that level being probably more likely. But we've not yet consolidated that break. It was only a brief dip below that level. The biggest thing or story, I guess, from yesterday was not so much the oil inventory numbers. Anyone who traded the oil inventory numbers, well, let's just have a quick look at that. It was a really good example for some of the newer guys of a situation where it really epitomizes that data not to be touched in that kind of circumstance. For one, the data was very similar to what we had from the API, and two, you had conflicting signals with a drawdown in headline, but then US output up and some other of the other components also giving mixed direction. And so very difficult to get a clean take on whether that report was bullish or bearish. If anything, it kind of was very similar to the APIs, which means it definitely wasn't an outlier. And as such, what you got here, you can see these really big wicks on both the up and down side to finish exactly pretty much where we were. This is a half an hour candlestick. So a good example of, unless you get this real outlying piece of data or a unidirectional kind of release as a whole, it's just not worth touching it in terms of trying to jump in on any trades on that figure. The bigger move came afterwards, and that came really, it was initiated around here, and that was at 4 o'clock. This then saw a gradual move over the course of really an hour and a half or so, from 43.75 all the way down, a technical break of that previous low that was seen the day before, just sub the 43 handle, and then prices really started to shoot lower. Initiating a lot of this fall was 3 OPEC delegates rejected the idea of deeper production cuts, as referenced by the Iranian oil minister. If you remember, there was that Platts article very early in the day. It then got ran by Bloomberg when the US started to come in, talking about Iran suggesting we should do deeper cuts, but maybe not just yet. Prices took a little bit of a lift on the back of that, but then that got rejected. So no deeper cut being thought about saw prices move lower, and again that break saw prices then continue to edge down. Now we've had a couple of news stories this morning, most notably was this one. Now yesterday we spent quite a lot of time talking in the briefing about why has oil been on this downward trajectory, and a big part of this is to do with the Nigerian and Libyan supply that's coming back online after several months, if not in the case of Nigeria over a year, where pipelines have been offline, impacted by militant attacks on pipelines and general civil unrest in those particular countries. So the comment that's come out this morning is saying OPEC committee is said to focus on this specific problem. So discussions on Tuesday at OPEC and non-OPEC joint technical committee. So what this joint technical committee is they're the team that meets to make sure that the Vienna agreement that we've had on the 25th of May gets put into action. So they've said the committee are focused on how to deal with the resurgence of Libyan and Nigerian crude output rather than deepening production cuts by other members. So again, this is a slight shift in focus, and so when you're navigating the news flow, it's good to be aware of what the latest kind of comments are. So this talk that was kind of circulating yesterday morning about a deeper cut, that seems to have gone away, and the latest would suggest now that we're looking at potentially more toward capping Libyan Nigerian output, which has been a predominant force to weigh on crude prices of late. There wasn't a serious discussion about deeper cuts, the delegate said. The option came up briefly, but no numbers were mentioned, according to one delegate. Again, these are all unspecified people that are noted for these talks. So overall then, still I would say remaining of a more bearish sentiment for oil. I don't think that really has changed. US output yesterday was up once again. Percentage wise it was up 0.214%. So in terms of the amount of oil being produced now in the US, 9.35 million. You know, going at this pace, you know, it was only trying to think maybe 3 months ago when we breached 9 million, and now we're already up to 9.35. You know, don't forget now, this is really knocking on the door of becoming the world's top producing nation once we get toward that 10 million marker. So it's kind of a matter of time, it would seem. One thing that I have seen though is that lower oil prices, even though we know the shale break-even average price is probably more circa mid to high $30, so very close to price but still below. So you could say they're still in the money at the moment. But I have read a couple of articles suggesting that the rig count might start to tail off a little bit on this rapid incline that we've seen for 22 consecutive weeks. In fact, some people suggesting that the rig count might go down slightly. So again, that, you know, some of these investment decisions from these US firms, certainly with this price looking to potentially remain lower could alter those decisions, which could then have a net impact on the speed, let's say, of US output going up, albeit I still believe that it will continue to track higher. So I guess in terms of a play here, looking technically, you've got the pivot level at 42.93, so about 40 cents above current price. If we were looking at drawing a line on that pivot level, it pretty much matches up perfectly with the low point that we had back on the 20th, so 2 days ago. Looking back to Tuesday's support point, that break of that level as well did equate to a pickup in the volume. Probably a lot of stops just getting run on that decline amid that source comment that came out shortly before the move. So any pullback up to 42.94 pivot could be interesting for a short idea. But I guess you just need to be wary of what are the conditions when we get to that point, if we should get back up to that level around 43. I guess on that point, again, a good thing to think of is that when you come in, obviously good to have these strategies in mind of what you foresee as potential actioning of trades throughout the session. But it's important, though, to have that flexibility that, as we've seen with OPEC comments, it can be quite a fluid situation and communication can change quite quickly. And so then you need to factor that in as well to your strategies. So when you get back up toward that point of execution, do the same rules still apply at that point in time. Okay, quick look at the pound. And we've managed to recover a little bit from some of the losses of late. Now what you're looking at here is trying to encapsulate in this chart I'm sharing is the full performance of sterling dollar cable since the hung parliament. That was obviously that key level which did get broke on Tuesday to the downside from the initial hung parliament low, but we had a pretty strong recovery over a very short period yesterday. So just highlighting that point there. This of course was when Andy Haldane, who spoke yesterday, made some very interesting comments where he was talking about essentially policy from a more hawkish angle. Now this is interesting because Haldane, for one, is the chief economist of the Bank of England, so highly respected and influential person within that committee. And then second, Haldane is a known dove, and so to hear hawkish comments certainly was a big surprise for the market, and the fast money move, we did see a pretty decent pop on the upside at that time. The question mark this is brought around then is trying to decipher what it is that the Bank of England are thinking is getting increasingly more difficult because of mixed signals that we've had of late. If you remember, if you're talking about the policy tool of forward guidance, then this is a bit scattergun at this point, where we're a little bit unsure of really what it is that the bank are trying to say. Now, I'll get round to what I really think is the underlying matter here, but what you can see here on this chart I'm sharing is the probability of rate increases from the Bank of England at the end of this year, of 2017. So on the left hand side you can see the assigned percentage probability, and then the timeline going from May to June to where we are as of yesterday on the bottom axis. So you can see you had the 5-3 MPC split from last week. That was a surprise, very hawkish split. Saunders, McCafferty and Christine Forbes going against the grain, if you like, voting for an immediate hike. That saw interest rate hike expectations rise from about 25% to just shy of 35%. Then you had Mark Carney deliver a delayed Mansion House speech where he said that now's not the time to raise rates, not with anemic wage growth and mixed signals on consumer spending. Very dovish comments, excuse me, that coming of course from the most important person, the governor. And so the expectations dramatically dropped from around 34% all the way back down to 20%, only then for Haldane to step in and ramp it up again back up to 42% probability. I would say that's awfully high, I'd say, from a 42% probability at this point that the Bank of England will hike rates by the end of this year. I think that's incredibly high, in my opinion. I think that given the reasons that Carney specifically said, I think the Bank of England would have a really tough case trying to back a rate rise so soon this year. Not that to say as well that we still have Brexit negotiations to get underway, which is proving a bit of a headache because we can't even form a cohesive government at this point in time. So a lot of risks out there on many different levels for the UK economy going forward. I guess the important thing to track here from an economic data point of view is inflation readings are absolutely critical to try and ascertain what it is the Bank of England might do in the medium term. Obviously we know CPI headline reading year on year now is at 2.9%, and so if it went hypothetically to something like 3.2, knocking on 3.5, then it is going to get to a point where that tolerance level, that's the word the Bank of England like to use, their tolerance runs out and they have to take action. So that figure is going to be really important going forward to monitor in the months ahead. What I actually think is the underlying reason here for this quite mixed communication, I'm not talking about the minutes, I'm talking more about the dovish Carney, the hawkish Haldane. I think this is a conscious decision from the Bank of England to manage expectations in the market and give themselves flexibility as a central bank. If you think about it, the market was in a state before Haldane spoke that really the Bank of England is in dovish mode. The governor's spoken, he speaks for the majority, i.e. the 5 over the 3 that voted in the last meeting. What do you do then as a central bank is, look, you don't want to rule out any option. What if inflation does start to continue to move higher? You do want the ability to hypothetically be able to move interest rates to counter that. So in order to manage expectations, you send out who is a dovish member to speak hawkishly, because you know you'll get a bigger reaction from the market, given that is away from their typical view. And now, if the Bank of England were to intonate towards a hike, or they were to be dovish, all of this should fit within the realm of expectation. So if you like, they've opened up the guidance kind of spectrum, if you like. Yes, that makes it a little bit difficult to trade, but from a strategy policy point of view, I think this isn't the Bank of England, to me, having arguments internally. I think this is a coordinated strategy, so to speak. So just my take on it. Obviously you guys might beg to differ, but certainly looking at cable this morning, I guess there's more near-term themes that we need to digest here. Quick look technically, pivot, as I said earlier, holding up some of the price action. Should we break pivot, then again I'd be looking at that 126.74 level. It'd be interesting if we broke that, then if it comes back for a potential entry point to get short again. Still probably the preference here, given some of the political uncertainties I'll discuss in a second. Could be a potential short there at that point, that previous level of support, to then target a move down to S1. That would be a decent kind of 30 ticks there. And then you've got the actual low that's been seen post the hung parliament, just below 126.25, maybe as a second target. Looking then at the press from the UK, just to get you up to speed, these are some of the headlines that I'm reading out. The Telegraph: Theresa May faces constitutional crisis as Labour and the Liberal Democrats vow to vote down manifesto pledges which failed to gain public support. So let's just go into this in a bit more detail. May facing constitutional crisis after Labour and the Lib Dems threaten to use the House of Lords to water down Brexit. So the Prime Minister is facing a battle to get the crucial legislation through the upper house after it emerged that peers may seek to ignore a 72-year convention and block new laws paving the way for Britain leaving the single market and customs union. This is called the Salisbury Convention. Now, for those of you who are new to kind of maybe looking at UK politics at this kind of more detailed level, let me just explain roughly what the Salisbury Convention is. This was a previous infographic that I used. This is direct from the UK Parliament website. This is when they were talking about the Brexit bill. If you remember, there was that campaign to try and block the Brexit bill, that the government didn't actually have the legal right to call a Brexit. This then went through various hearings in the lower and then the upper house of Parliament for it then to become a royal assent. And so you can use the same framework to explain what it is that the Telegraph are talking about this morning and what the Lib Dems and Labour are trying to achieve. And so you have the House of Commons. So let's say the Conservatives bring forward a manifesto or a series of laws that they want to bring in as per the Queen's speech from yesterday. This then goes to the House of Lords. Now the House of Lords is a mix of different party politicians, if you like, in terms of what they represent. What they can do, though, is then the House of Lords can make amendments, i.e. Lib Dem and Labour members, which then means that it goes back, if changes are made, to the House of Commons. So it goes, if you like, from initial, what the government has said, House of Lords then say, hang about, we want to make some amendments. It goes back to the House of Commons then to have a vote. If then the House of Commons, the changes are rejected, it can go back to the House of Lords. But what you could get, hypothetically, if it wasn't for the Salisbury Convention, is you would get a stalemate situation where every time the government tries to push through something, let's say it's very conservative policies, the House of Lords might vote it down. The Conservatives would then need to, let's say, make it less conservative or less of that direction so that they get broader support from the upper House of Lords. It then cannot go back and forth 2 or 3 times. When it gets to the second or third reading of amendments, by that point then the Conservatives, so let's say the original manifesto, should have been watered down enough that it appeases the members of the upper house, the House of Lords, and then it goes through. The Salisbury Convention would say that then at that point the House of Lords will not block it, they will let it through. So therefore then change is accepted and the bill becomes law. The thing that Labour are suggesting, though, is that within hours of the Queen's speech delivered yesterday, which set out the various Brexit bills to be presented before Parliament in the coming months, opposition parties began to argue the convention does not apply to Theresa May, as she did not win a majority and has not agreed to govern in a coalition. So again, it's kind of legal technicality, I would say. What they're saying is, I guess, correct. She hasn't won a majority, we know that, and she hasn't been able to form a coalition as yet, signed and sealed with the DUP. So does she have the right to then enaction the Salisbury Convention in this situation? So this is where we're at this point. This is kind of, I would say, quite regular UK politics in terms of them trying to use the various make-up of Parliament systems to try and alter then and water down the original plans of what the government may have put forward. Will this be a game changer to block it? Probably not. I would still say the baseline scenario is probably for this to get voted through by the DUP when they vote on what the government announced next Wednesday and Thursday. This is the other one then, is where is the talks up to in regard to the Conservatives and the DUP. The Telegraph late last night reporting an exclusive: the DUP broke off talks with Tories for 36 hours this week as they demand £2 billion for Northern Ireland. So, when you know that you are a real power player in this deal, irrespective of your very small, if you think about it, the Conservatives had, 318 seats in the general election that they captured, and you've then got the DUP, which had 10, and yet they are incredibly powerful in this equation because the Conservatives need them. And so what do? Well, if you give me £2 billion, I'll agree with what you want. So, money talks in that situation, but this is where we're up to at the moment.
Democracy live and well.
Yeah, as Piers just said then, democracy live and well. So DUP have fired back though. Sir Geoffrey Donaldson plays down reports of 2 billion requests to the Tories. Sources told the BBC that the DUP wanted £1 billion invested in Northern Ireland's health service and similar figure for infrastructure projects. However, DUP MP has described the figures as wild speculation and wild of the mark. But these, again, this is just kind of getting a flavour of where the talks are at the moment. They don't seem to be quite at the point of getting an agreement done, and it is going to have to be fairly significant concessions by the Conservatives to get the DUP on side. The risk is, the bigger the concession, the more ammunition you give the opposition parties. So it's this is not a good situation for Theresa May, because whichever way she turns, she's going to come out on the wrong side of this, unfortunately, in terms of her future as the Prime Minister. Is probably only going to escalate the calls on her to potentially step aside in the near term. Okay, let's move on. A couple of other headlines we should cover. We've had the RBNZ, the Reserve Bank of New Zealand. They've held interest rates at record lows overnight. That's as expected, but they've made some quite interesting commentary. So they indicated that it won't raise interest rates anytime soon. The currency rose after the bank failed to complain about its recent strength. Now I've got a chart here that you can see mapping, we're going back to March, so encapsulating from March, April, May, June, the movement of the Kiwi dollar, and you can see we've gone from around 69 here all the way up to 72, so we've had a lot of strength, and this has caused in recent commentary some concern about the strength of their currency, the impact that that's having on their economy. The fact that they dropped that, though, from being much of a reference point from their discussions meant that we actually strengthened a little bit in the Kiwi overnight. Has that had a read across into other assets? No, very specific only for the Kiwi dollar. It hasn't had any ramifications in regards to things like the Aussie, for example. Talking of the Antipodean currencies, for the Aussie, likewise elsewhere for the CAD, obviously if oil does start to break down at all at any point, whether today or in the future, then obviously this brings about quite interesting dynamic for those commodity related currencies. I would say from a correlation point of view, then the CAD is extremely correlated with movement in oil. However, that has a slightly lesser impact, but is still a major factor if you're looking at the Aussie currency as well. Okay, looking at the calendar, very quiet this morning. Not a great deal going on, so that should be telling you one thing, and that is to be realistic with what your trade ideas and strategies and targets of any trades that you enter should be, because there's not too much going on. I would say probably more prudent to wait for the US entrance, not because there's particularly a very busy calendar, but just to pick up a volume. Let's see how the American sentiment is when they come in. Looking at some of the indices here, the DAX has found a bit of support around the S1 level in the intraday, which just below there was the low point from yesterday morning. Could be interesting to watch. The S&P likewise, we are testing around the low that we printed before the recovery into the Wall Street close. That was also around the low of the morning from yesterday's session in the futures in the S&P. Just looking at it here in the center right chart, and we found a little bit of support around that point at the moment. So it could be a little bit of a range bound trade there between that 24-28 for the time being until the US come in and we start to see the associated volumes pick up. Data wise this afternoon, you've got the regular weekly jobless claims from the US. Not a great deal. The Conference Board's leading index, this is lower tiered economic data as far as any impacts on prices is concerned. Eurozone consumer confidence, the flash estimate, again, likewise, not that big a factor for European assets, but certainly worth monitoring. You do have a Fed speaker, Jerome Powell, voter speaking at 3 p.m. That's definitely worth just keeping an eye on your calendar at that time. So a couple of things other than this I would definitely be monitoring, and that would be any potential new comments in regard to sources from OPEC. Quite interestingly, as we've got down to these lower bound levels, we've already heard from Iran, we've already had OPEC source comments yesterday, we've already had OPEC source comments this morning. You know, this isn't rocket science. The lower the price comes, first port of call from OPEC strategy is to start making some source comments, i.e. oil ministers leaking what they're thinking to news agencies in order to try and stop the speed of this decline. If we go lower, I would say if we break this 42.20 key level with more force, and we start to see a move then to 41.40, there won't be any need for source comments anymore. It will be the oil ministers will start coming out and talking the market. The points of interest here are potential caps on Nigeria and Libya as their production comes back online. They're a big concern in terms of that negating the impact of the production cut agreement. And then you've got this whole idea of maybe deeper cuts. The other thing to monitor, of course, is the fluid political situation in the UK, any updates about the DUP and so on. I wouldn't imagine, though, at this point, that, don't forget, we still have the vote, doesn't happen until next week, Wednesday, Thursday, on what the Queen's speech of the Tories' proposals that was announced yesterday. So there is still time to negotiate between those parties. Okay, guys, that's your morning briefing. So good luck, have a good day, and I'll see you in the chat room. Thank you very much.